So you may have heard someone say, my bank is FDIC insured, so they have to give me my money back after a fraud event. Have anybody else thought that before or heard somebody say that? If you have, put it in the chat. I want to know in the comments, have you heard somebody say that or have you thought that yourself? Before we get into today's content or why I made this video, I got a video that I want you to see that came from TikTok that inspired me to make this video about the FDIC and what it is. So let's take a look at that together.
Just wanted to give a friendly PSA to anybody who banks with Chime to stop doing that and switch banks immediately. One of my best friends recently got his phone and wallet and everything stolen. The people who stole his things were able to take his debit card and they went to multiple ATMs, kept doing the like $200 max, like withdrawal, whatever, and they ended up taking roughly like $6,000 out of his bank account because they completely wiped out his account. The ATM transactions, and they even went to a few gas stations. We're not in the city that we live in, so it was very obvious what ones were not done by him. And when he like talked to Chime, they said, nope, you need to do a dispute on every single one of those transactions, and think about how many times they would have to do a withdrawal, $200 at a time, to make $6,000. So he tries to dispute these things. Literally the next day, he gets an alert that says Chime will be deactivating his account. And like this was, he got the message Sunday that they were going to be deactivating his account Monday. And I was like, how can they deactivate your bank account when you just filed a ton of like fraud charges? Because they were. And he was like, I don't really know. So then I was with him and we had called their customer service and we were trying to talk to them about it. And they said, yeah, it looks like your account's being closed because you are not following the guidelines of like an ethical banker or some shit like that. And I was like, it wasn't you, and you told them that. That's why you filed all of those things being fraud. Well, they denied almost all of them. Out of his $6,000, they sent him a check in the mail because they deactivated his account. And they said there was no reverse on that he could not like access whatever once his account was deactivated. And that if they did decide that his dispute were legit, then they would send him a check in the mail. He got a check for $1,100 out of his $6,000. That's all they would refund him. And when we were trying to like talk to them and dispute things, we were notified that Chime is not an FDIC insured bank. So they do not have to give you any of that money, even if it's fraud, even if it was stolen, whatever. They do not have to because they are not FDIC insured. They have a few select banks that they work with who are FDIC insured, but Chime itself is not FDIC insured. So they did not have to give him back a cent. And they gave him a measly $1,100 when these people stole $6,000 from him. So he now has a different bank account. It's much, much better. He made sure to look that it is FDIC insured. So if you are banking with Chime, or like I would say anybody should double check that your bank is FDIC insured, especially with the state of the world right now, because if something does happen, if your bank is not insured, then they do not have to give you any of the money back, which blew my mind, but here we are, lessons learned. Let me help the masses.
Hey guys, so few things that we got to unpack on this video right here. So what she said was that her friend information was stolen. So I'm assuming his wallet got stolen. Maybe that's what it seems like. Maybe his wallet got stolen, and in the midst of his wallet getting stolen, his cards got used and was used at ATMs to get money, cash withdrawals. Okay. When they went to dispute all of these different transactions, Chime froze the account and then later told them that because they was not using the account correctly, they were going to close the account. Out of the $6,000 that he was out, they only gave him back $1,100 of those $6,000. Okay, so let me unpack this right here. First of all, you get nothing else out of this video. First off, FDIC does not handle fraud disputes. Okay? FDIC has nothing to do with fraud disputes. Okay? It's the first thing. I work in a bank and I actually work in a department that handle this type of stuff. So I'm telling you this because this is what I do for a living, right? FDIC does not handle this. FDIC stands for Federal Deposit Insurance Corporation. That's what FDIC stands for. What does FDIC actually protect? It protects deposits at banks if the bank itself financially fails. Again, FDIC only kicks in if the bank itself fails. Your deposit up to $250,000 per account that allows you to have that. Joint owners can have $250 plus $250, and there's some other ways you can get more. But off the rip, FDIC does not handle frauds. If your bank, for some reason, goes belly up and they close for whatever reason, this is what FDIC insurance for. So if you're an old head like me, and back in 2008, when everything went haywire with the housing market and all those crashes and all those bank bailouts that had to happen, bank bailouts, when those banks were failing, that's what FDIC is for. That's when FDIC, that type of thing is what kicks in FDIC. Fraud has nothing to do with it. What is the equivalent to FDIC for credit unions? NCUA. That is the equivalent. So NCUA stands for National Credit Union Administration. Same thing. If something happens to the credit union and the credit union fails, NCUA is going to kick in and do the same $250,000 per member per credit union. But again, just like FDIC, they have nothing to do with fraud. So we got to get that out of the way. I don't want you all, especially if you are subscribers or you casually view me, I try to educate you all as much as I can, because I told you I don't like y'all looking crazy out here in these financial streets and saying stuff that does not actually work. And this is one of them. So we have to unpack what the lady said, but I want you just to know that first off. So this is going to make this whole conversation turn out different just because of that little bit right there, because that was her main talking point at the end of that TikTok, was that the reason why they couldn't get all their $6,000 was because Chime is not an FDIC insured bank. They have other banks that back them that are FDIC insured, but they are not. And so now they went, got another bank account, and, that bank is FDIC insured. So bottom line of the story, make sure that your bank is FDIC insured. Okay, boom. All that's fine and dandy, but that has nothing to do with the fraud that man experienced, or that girl, I don't know, experienced, right? So you have to understand the difference. What they are experiencing, and there is a law that actually covers that. It's just not FDIC. The law is Regulation E. That is what covers fraudulent electronic transactions, okay? So Regulation E is part of the Electronic Funds Transfer Act. It protects consumers when unauthorized electronic transactions happen. That includes things like debit card transactions, ATM withdrawals, online banking transfers, ACH withdrawals, direct deposit, and some peer-to-peer transfers. Now, peer-to-peer transfers, think about Cash App, think about Zelle, Venmo, stuff like that, okay? So we're talking about electronic means of banking. Regulation E covers that. Has nothing to do with FDIC. This is a regulation. So Regulation E is what's supposed to kick in when you experience some type of electronic funds transfer type of fraud. Okay. So we have to know what we're talking about, because it matters. And the reason why it matters so much now is because there's so much fraud, especially the call fraud. They're trying to put you in a panic. Give me your login information. Give me your password. And then they may even have information. They might even have the last four of your debit card number. They might even have your birthday. They might have your address. I mean, they probably got a lot of your information because it's called the dark web. And it's also because so many businesses are getting breached. You hear about breaches all the time. All the time. If your information is on the internet, you fill out applications on the internet, you put information on the internet, you are subject to having your information leaked through breaches. It even happened to Equifax. I want to say in maybe 98. I mean, not 98. Oh, have mercy. What is it? 2008, maybe 2008 or 13. It's something like that. 2018. It might be 2018. Y'all Google it. But anyway, Equifax even got breached. So it happens. I'm in South Carolina. The South Carolina Department of Revenue got breached. Now that might have been the one that happened in 2008 or 13, somewhere like that. It's so many of them you can't keep track, right? But then you have these people calling you, they spoofing your bank's phone number. You thinking that you talking to a bank representative. You all worried because they talking about they finna wipe your account out, all kind of crazy stuff. So they got you in panic mode and you're handing them information. And now the next thing you know, they don't wipe your bank account out. This happens more often than not. Trust me. And if they're not doing that, they're sending you a text message and you may have just used your card. You know, they're very sophisticated with this fraud. And you may have just used the card and you might get a notification saying, did you make this transaction? Now, a lot of banks do that when you make, you can get those text alerts. So that's why it's so hard to distinguish what's real and what's fake, right? And so that's when Regulation E can get a little hairy. It could get a little dicey in that part because there's such thing as authorized and unauthorized transactions. Okay. Authorized and unauthorized transactions within Regulation E. So for instance, if this person had his wallet stolen or her wallet stolen and they got her debit card or his debit card and went out and went on shopping spree and got money back or went to ATMs from what this young lady in the video said, then that is real fraud because it was unauthorized. Okay. That's real fraud because it was unauthorized and it can be covered under Regulation E. That's a real thing. Now, what is authorized? So say for instance, the young lady or the guy gave their friend the card and gave the friend their PIN number. And they say, okay, you could get $200 out. And they go and get more than 200 and they just run it up. Well, see, it gets dicey then because you did authorize them to use the card. You may have verbally told them to only get 200 and they went them up, but still you authorized them. You gave them your card. You gave them your PIN. So you authorized them to access your bank account. That's the difference. Authorized versus unauthorized. Now, with the ATM withdrawal thing, you have to have a PIN to withdraw money out the ATM. Not saying these scammers can't be sophisticated, but ATM with the PIN, unless you're crazy and writing your PIN number inside your wallet on the back of your card or something like that, the likelihood of them knowing your PIN number is very slim to none. If anything, they'll try to go to retail stores or something like that gives cash back and try to get as much cash back as they can off of cash. But usually, again, when you're getting cash back, you're usually putting in a PIN number. So I'm not sure about that part. Not saying that she's lying. It just sounds a little weird. That's all I'm saying. It sounds a little weird on that one. Okay. Now, you also got to think about this too. There's so much fraud where people are actually doing the stuff themselves and then reporting fraud. So say for instance, you go to this concert and you spend $1,500 on the concert tickets, right? And then the next day you call your bank and say it's fraud. I wasn't at no concert. Trying to get your money back, disputing the charge, Ticketmaster, whoever, saying, hey, I didn't do this. Those are the type of things that usually end up being stuff that can close your account because you're lying, and they have ways to really find out. So let me tell you another thing too. There's also something called when they can take your card information from off the dark web. They sell those things. They sell people card numbers, and really and truly, they may only have a few numbers of your card, and they're trying to piece the rest of it together. So usually within a bank, there are something called bin numbers. And I just talked about this in another video, something called bin number, like where the first few numbers of the card is the same, and it's the last maybe 8 numbers or 6 numbers that are different, that is different for your particular account number. But the other numbers, so it's 16 numbers and all, the other numbers make up the front part. So Visa usually starts with a 4, MasterCard usually starts with a 5, stuff like that. So you're looking at that type of information. So with that being said, sometimes when they are stealing people's, they get like a whole packet of debit card information. Say they figure out, okay, these debit cards is linked to this bank. These are the banks. So now we're trying to figure out what is the rest of that card number. If we can figure out the rest of that card number by getting out the rest of your information, texting you, and getting you to verify, is this the last few numbers of your card? Because what they're trying to do, they're trying to make you put the pieces together, right? And if you're able to put the pieces together, what a lot of them can do is create their own card. They can create their own card. When we got the chip cards and now the tap, a lot of people don't do the swipe as much. That's what they were more banking on back then, was the swipe, where they can actually take your number, put it on one of those prepaid like cards or something like that, and do the swipe on you. So those were a way that a lot of people were able to get away with fraud with that one, because they was creating a card. So when the disputes came in, it would come back as card present on the Visa network. They're like, well, wait a minute, the card was present. A lot of times it would be just like this young lady said, where you can tell where, hey, I'm here, I'm in South Carolina, and this card transaction happened in California. At the same time, I can't be getting my prescription at Walgreens and getting gas in California at the same exact time with the same exact card number. It's not possible for me to be in 2 places at one time. Especially I'm on the East Coast and on the West Coast. I can't do I can't do that. I'm not some magical person, right? And so those are the things that have to be looked in a little bit deeper. But again, we got to stop confusing the lingo of what the banks actually can do. What is FDIC versus what is Regulation E? And so we have to look at the time limits that you have too when it comes to reporting fraud. So a lot of fraud is very time sensitive, okay? So if you report a fraud within 2 business days, your maximum liability is $50. So as soon as you realize, like, that's why I tell people, check your bank accounts, right? Check your bank accounts regularly just to make sure there's nothing funky going on. I also tell you this, if you have an app where you can turn your cards off, credit and debit cards, turn them off until you're actually using them. When you're going in the store and you're about to use that card, go on your app, cut it back on, use the card, cut it back off. Because again, there's people out there that may have gotten your card number breached off of any system that you may have used your card on, and they're trying to get that information. They're trying to piece those things together, right? And they're hoping that you will help them by them calling you, doing all the things, because they're really fishing for information to try to take your money. So again, if you report a fraud within 2 business days of you seeing that, your liability is $50 under Regulation E. Within 60 days, your maximum liability can be $500. But if you wait longer than 60 days after your statements, then the liability can be unlimited. You know, you could lose everything, however much they took. So we don't have the timeline on this case that we were just looking at on TikTok. We don't know what the timeline is for them to only give back 1,100 of the 6,000. There's a lot of missing pieces that, as someone that work and do that kind of work, that we would have to ask those type of questions for our fraud department to handle it. So we would have to ask, okay, was the card always in that person's possession? Did they talk to anybody on the phone? Did they click on any links and emails or on text messages? We need to find out how they were able to get the information. How was it able to get into the fraudster's hand? What was all the circumstances around the fraud so that they can do their due diligence as far as the investigation? So now it could get all in the weeds of, okay, provisional credits, you know, depending on the type of fraud, you know, they may have 10 days to give a provisional credit while they're in investigation. An investigation can go up to 45 days to 90 days, just depending on what it is. But again, it just depends on what it is and what their findings are. Now, I deal with banks and credit unions. When you're talking about Chime and Cash App and Venmo and a lot of these other fintech apps, they're not an actual bank. They're a fintech app. They're a financial technology app. They're usually backed by a bank that is FDIC insured. If the bank fails, you know, that's what they are. But I really don't know exactly how their Regulation E would work with a fintech technology app like Chime or PayPal or any of those for that matter, because are they considered a financial institution under Regulation E? I don't know. Because again, under banks and credit unions, you have Regulation E. Are they maybe doing some funky stuff to get around it because they are a financial technology app and not necessarily a bank? They could. There's all types of devils in the details, right? There's all types of loopholes. So this might be a loophole situation for all I know. You know, I tell people all the time that you want to bank, if you have a bank online, I'm not opposed to having a bank online. I have banks online. I have a credit union that I deal with online. That's only online. They don't have a physical branch. Discover, they're only online. Capital One, there are some branches, but mostly for the most part, they're online. American Express, online. So some of your big names are online. So online is not the problem. The problem is they an actual bank, or are they a fintech app cosplaying as a bank and got somebody else that's backing them that's FDIC insured? But what about the regulation? What about Regulation E? Does it cover those type of charges under Chime? Now, if the dispute is going through to the actual banking that is backing Chime, then I would say that bank supposed to be under the Regulation E rules. And it would be that bank that needs to do the investigation if they are the furnisher of the debit card or the credit card. If they're the one that's actually furnishing that card, and on the back of that card, it says issued by Bancorp in Chime's case on the back. That means that Bancorp has the burden to do the due diligence of investigation because they are the regulatory bank, right? And so they are supposed to do their due diligence and do the investigation whenever fraud has occurred. So if they don't, then you got a problem. And you will have that problem with any bank if you know for sure that you did not authorize. And now I said that's where it gets a little bit icky and hairy. It's because you can actually do something that is authorized and not know that it is fraud. Like I was telling you earlier, clicking on links, doing text messages, doing stuff that you think that is right because somebody's calling you and telling you they got your stuff. And you think you're doing the right thing just to find out that you're doing the wrong thing. And now they may not give you your money back because in essence, you did authorize it. I know it sucks. I hate it, you know, but in essence, you authorize it. And again, there's those loopholes. sometimes when you have community banks, that's why I tell people to, if you can do your banking business with a community bank, a community credit union, not the ones that are really big like Chase, Wells Fargo, Bank of America, those big ones. I'm talking about your local bank down the road that probably only got one branch or maybe two in your whole city. Those right there are more likely to help you get your money back, even if they have to give you your money back, than the big ones, because the big ones have so many customers that they can't possibly keep up with everything. And so they usually just go through a whole nother department. You're not talking to somebody that you know. Usually when you're dealing with a community bank or community credit union that only got that one branch or two branches in your community, you probably know everybody that work in there, especially if you've been a member or a customer of that bank or credit union for a very long time. You probably know the president, you know everybody, right? Because they're local. They're not some big conglomerate of a bank, right? And so you can have personal relationships with those type of banks. And I'm not saying that it's got to be super small, because like the bank that I work for is considered a community bank, but we have like over, I want to say 10 locations in different counties, but we still consider a small bank, a small community bank. So it just depends. So with that being said, you still can get a more personalized touch when it comes to things like this. Some things are still out of your hands because, again, authorized and unauthorized, even when you think you're doing the right thing. So it's really important that you understand these things, because fraud claims can get denied. Now, here's another one, because they're getting so sophisticated. There's another example. So things like sending money to a scammer through Zelle. Okay, you didn't know it was a scammer, but you sent it, so it was authorized, right? Buying something online that turns out to be fake, you still authorized it. Giving someone your login credentials, that's the biggest. You authorized it. Whatever they do, it's sticky. It's sticky. and like I said, I hate it because it gets sticky like that. But I do want to pull something else up. Excuse me. I do want to pull something else up on the screen. Okay. So we got up here right now. These are the protections that are explained. So we got the bank failure, bank or credit union collapses. Think about FDIC and NCUA insurance. Protects deposits if the bank or credit union fails financially. Coverage limit up to $250,000. Protects deposits if the bank or credit union fails financially. Does not cover fraud scams. Okay. Regulation E. Fraud/unauthorized transactions. Think about unauthorized. Protects consumers from all authorized electronic transfers. Liability limits based on your reporting time. Report within 2 days, we're talking about $50. Report within 60 days, $500. And then after 60 days, it could be unlimited risk. So that's what I'm saying. You really need to pay attention to your bank accounts. It is so important, guys, that if you get a call that is saying they're from your bank and they're saying that somebody got your money or whatever, hang up, just hang up and call the number on the back of your card. If your bank is online, or if you don't have an actual branch, if you have a branch in your town, if you're able to, go to the branch, talk to somebody in person, say, hey, I got this call, and they're saying that somebody's gotten to my account. Like, again, a lot of times they're trying to piece information together and hoping that you're going to give them that information. That's usually what's going on. They're hoping that you're going to help them continue their fraud. But if you hang up every time, if you get a text message and you ignore it, and you just call the number on the back of your card, credit card, debit card, whatever, and talk to somebody that is a representative, get all their detailed information and all that type of stuff. Like if they get on the line and they say, hey, my name is Starr Carter and my number is 245-678. How can I help you? You want to write down, okay, I spoke with Starr Carter at such and such a time. Her number was da 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 da. And the details of that conversation, right? And tell them exactly, tell them exactly what happened. So it is very important, guys, that we know the difference in what we're doing, because if you know the difference, if you, like with this lady that was on this TikTok, if they knew about Regulation E, they could have said Regulation E. You're violating Regulation E because these were unauthorized. My wallet was stolen. My information was stolen. I never gave anybody authorization to steal my information. So why am I being liable for this $6,000 withdrawal? Multiple $200 or whatever, like she said, to run it up to $6,000. There's no way that I would have ate the rest of it. If I know I didn't do it, if I know I reported it immediately within the time frame, as we said, 2 days to 60 days, $50 or $500. Okay, what else do y'all need? Even if they went to ATMs, even if they won't do the due diligence and pull the cameras off the ATM, maybe you need to do that. You need to file your police report with whatever your police department is that services that area, precinct, or whatever, depending on how big of a area that you live in. You need to go a little bit further to sometimes help these people, because they were like, hey, we're showing that you did it. And I'm like, no, I wasn't at an ATM, because this says I was in California and I was in Timbuktu, North Carolina. There is no way. And get them to pull the cameras for wherever it supposed to took place at. So if it supposed to took place at the Bank of America over in California, I would be trying to find out who is that bank, and if they can give me that footage, or provide that footage to the local police office. Sometimes you have to go a little bit further, especially when you're dealing with banks that are so-called banks, financial technology, that may or may not do their due diligence, because you're not dealing with a real finance institution. You're dealing with a financial technology app that is bank by bank. And like, again, there are loopholes. There can be some loopholes. Even with the peer-to-peer transfers, when fraud happens with that, you're doing business with a third-party app. So if you're transferring money from your bank to this third-party app and then give it to the fraud people, you went through a third party to give them that money. So really and truly, your bank is off the hook even when that happens, because you went through a third party. You went through Cash App to give them the money, even though you drew the money from your bank, Bank of America, went to your Cash App to the fraudsters. If they had took the money straight from your bank account unauthorized, you would have been able to get your money back faster than you going through Cash App, which is a third party, which can take the actual bank off the hook, because you use the fact a financial technology app in between that transaction. So really, truly, it's up to Cash App to give you your money back, because your money left the bank and went where you wanted it to go, which was Cash App. Now Cash App sent it somewhere else. So that's what I'm saying, guys. We gotta really understand how these things can really hurt us when we don't understand the technology, or not the technology, but the lingo. FDIC, NCUA insurance is at the bank fails. Regulation E can help you with these types of fraud things, as long as you're not a co-conspirator in the fraud, even if it's a scam, giving them the information. Okay. So I hope this makes sense to you guys. Let me know in the comments if this makes sense. Or let me know in the comments what has happened to you. Have you ever had a fraud case because you bank with one of these online banks? Like I said, it just depends on if it's a real bank or if it's a financial technology app that's bank by bank. Okay. Let me know in the comments what it is that you do. Again, guys, make sure you like the video, share the video, because there might be somebody else out there that thought the same as that thing, that you thought FDIC was what's going to get you your money back if somebody steals your money. It's not the same. It's not the same. It's different regulations for different things. Different regulations for banks for different things that can happen. So you just got to make sure that you are dealing within the right scope of the regulatory for the laws for banking or financial institutions. Okay. Again, guys, leave me a comment, like, share, subscribe, do all the things. Also, if you can hype this video up, please give me a hype. I really do appreciate it. And I'm going to see you in the next one.